So Kenya is sitting on the edge of something that could be absolutely massive, a huge economic transformation. We're talking about the promise of oil wealth buried deep under Turkana. But is this black gold really going to fuel the nation's future? Or is it just a super high-stakes gamble? Let's break it all down. Okay, let's just start with the number that has everyone talking. 370 billion Kenyan shillings. That's the high-end estimate for what the government could rake in from this one project. I mean, that is a staggering amount of money, the kind of figure that could totally reshape the country's economy for decades to come. But, a number that big, well, it comes with equally big questions. Is this really Kenya's golden ticket to a new era of prosperity? Or is it an incredibly risky bet, one with a pretty complicated past? That's really the core tension we're going to unpack right here. All right, so let's get right into it. To even begin to understand this promise, we've got to look at the project itself, the South Lokochar Oil Project. So what is this thing? Well, it's this huge undertaking out in Turkana County, and it's being driven by the local firm Gulf Energy. And when I say huge, I really mean it. This is one of the largest private sector investments in the entire history of Kenya. We're talking billions of dollars already committed to get this thing off the ground. And believe me, this has been a long, long time coming. Oil was first found here way back in the early 2010s. Then came years of exploration, a few big stalls, logistical nightmares, financial hurdles. But now it looks like it's finally actually moving toward full-scale commercial production. The target date to get the oil flowing? End of 2026. Okay, so that brings us right back to that massive number. Where on earth does a figure like 370 billion shillings even come from? Let's actually break down these revenue streams. Well, it's not just one thing. The government's getting its money from a bunch of different places. You've got their direct cut of the oil profits, of course. Then there are all sorts of taxes on the production itself, plus fees and royalties. And on top of all that, there's a whole lot of money to be made from related services, like storage and handling. And here's something that's kind of fascinating. Check this out. Just one piece of this whole puzzle, the services provided by the Kenya Petroleum Refinery, for storage and handling, that alone is projected to bring in over 42 billion shillings. That in itself is a massive amount of cash, and it just shows you the kind of ripple effects a project like this can have. Now, you might be wondering, why such a huge range in the forecast, from 136 billion all the way to 371? Well, it all boils down to one simple but very volatile thing: the price of oil on the world market. If the price is high, Kenya's payday is huge. If it's low, well, not so much. And this, for my money, is maybe the most critical question in this whole thing. If all this wealth actually shows up, who gets it? Who benefits? How is this gigantic pie supposed to be sliced? Well, the Petroleum Act of 2019, actually lays out a plan. Look at this breakdown. The national government gets the lion's share, 75%. Makes sense. But then the county government where the oil is, Turkana, they get 20%. And a really crucial 5% is set aside specifically for the local communities on the ground. It's a tricky balancing act, right? Trying to fund the whole country while making sure the place it comes from sees a real benefit. And that 5% for local communities, it's not just some random slush fund. It's specifically earmarked for things that have a direct impact. We're talking about stuff people can actually see and use every single day. New schools, better clinics, and really importantly, access to clean water. The whole idea is to make sure the benefits are felt right there at the source. Okay, so all this sounds amazing, right? But here's the catch. This whole promise comes with some serious history, a cautionary tale, really. To understand the risks, we have to look at what happened last time, because Kenya has actually been down a very similar road before, and the results were, well, very different. So yeah, that's the big question hanging over everything. With this much potential on the line, what could actually go wrong? The past gives us some pretty big clues. Take a look at this. This is the story of the last time they tried something like this, a smaller pilot program. It did bring in some money, about 3.6 billion shillings, but, and this is a huge but, the costs to get that oil out of the ground ballooned to over 8 billion shillings. Logistical problems, unexpected infrastructure costs, it all added up. The math here is pretty simple and pretty worrying. So what's the bottom line? It didn't make money. Nope, it lost money. When the auditors were done, it turned out to be a net loss of 4.5 billion shillings. That was a very, very expensive lesson in just how hard this oil business can be. That whole experience taught a really tough lesson. And this quote just nails it. That history shows exactly how important it is to have rock-solid planning, super tight cost controls, and realistic expectations if this new project is going to work where the pilot failed. All right, so this is where it all comes together, right? You've got this incredible promise of wealth on one hand, and this history of failure and huge challenges on the other. So how in the world does Kenya balance those two things? Okay, let's not forget the upside here, because it's huge. If this thing works, we're talking about a massive, long-term boost to the government's budget. Money for new infrastructure, for public services like schools and hospitals, and of course, jobs, a lot of them, especially in the Turkana region. But then you flip the coin, and the hurdles, man, they are just as big. The global oil market, as we all know, is crazy unpredictable. Getting money for new fossil fuel projects is getting tougher and tougher, and they absolutely have to make sure local communities see real benefits, or things could get ugly. And all of that while keeping costs from spiraling out of control like last time. When you strip everything else away, it really comes down to just three things. First, flawless execution of an incredibly complex project. Second, they need the market to be on their side, a healthy global oil price. And third, total transparency in how the money is managed, to make sure it actually helps the country. So there you have it. It's a mix of skill, honesty, and, well, a little bit of luck with those global markets. That 370 billion shilling promise, it's real. But turning that promise into actual prosperity for the country, that's the ultimate test. And the big question for Kenya's future is, are they finally going to get it right this time?